the most important part of our business, which is the people who actually work in our business, there's more and more engineers. Now, this could be talking my own book, but when I joined, maybe it was 10% of the company, and now it's over 25% of the company, and probably that will continue. And so, given that the people who are building all this software and creating these platforms for market making, liquidity provision, consumer finance are the core of our business, where the competition is really happening is for talent. And so we're competing directly with the behemoths of Silicon Valley for talent. And there it's really about showing people a career progression. So I will always say, and this is true for me, if you want to solve interesting, hard problems for corporations, sovereigns, institutions, then you should come work for us. And people in Silicon Valley are solving different kinds of problems, not that.
People in Silicon Valley are paid very well. Are your engineers paid as well as your traders? I mean, I think sort of the widespread perception is that they're sort of second-class citizens.
Yeah, you know, it's funny. When I joined in '93, I remember I might have thought back then, well, why am I, with all of my degrees and stuff, doing the math for the trader next to me? And I never felt, nor was I treated as, nor was I paid as a second-class citizen. And so for a long time, and this is really our CEO's idea, his idea was, let's get fantastic people with a quant, data science, engineering, software development skill set, and let's put them on the trading desk right next to our traders and our salespeople, and let's pay them like that. And then we had all kinds of technologists, some of whom were further and further from the trading desk. So one of the things I've been working on for the past few years is they're all engineers. We're all working on the business. And as times have changed and more markets have become automated and electronic, those old distinctions have really collapsed.
But have they created new sort of strains? I mean, are these traders in any way, do they see the engineers as threats to their career?
Well, let me put it this way. For a part of my career, I was co-head of our equities business. And at the peak, that business in New York had 600 traders making markets in the US stocks. And now that number is single digits. And there are a lot of engineers and there's a lot of software. And so, if anything, that's really the sea change that's happened. The people who want to commit capital and take risk increasingly absolutely have to have a math and software skill set. And the distinction between what we used to call a strat or strategist, data scientist here, and trader, we've actually collapsed that distinction. We call it traders who code, because turns out in 2018, trading and coding are the same thing.
Right, and you have to do both.
Yes.
We are almost out of time, but I have to ask you, I know another sort of important thing to you has been diversity. You are proudly gay, Latino. You've done a lot, I think, inside of Goldman to sort of foster a culture of greater diversity. I have to ask you, what do you think of Donald Trump? I mean...
I didn't vote for him. That's a tough one.
What did Gary Cohn tell you about working for him?
Listen, what I would rather say is, look, wow, that's a really tough one. I think all I can say is I didn't vote for him. He's the president. We disagree on all kinds of things. And certainly on the topic of diversity, I mean, I don't know him personally. I'm not sure what he actually thinks. Something that we've always done at Goldman, we've done this in all of our businesses, is we've said, okay, we're a place where we want everybody to bring their talent. And yes, it's the right thing to do, but it's also the commercially smart thing to do.
Sure.
If you think about it, if we're doing anything that makes someone with a great idea not want to come and join us because they're gay or a woman or Latin or an engineer as opposed to a trade, right? And then the world changes and we miss it and we excluded them, that's really dumb.
Right.
And so that's something that we're passionate about in places like, for instance, India. This is very much in the news. India's Supreme Court just ruled, striking down an old colonial era law that criminalizing homosexuality. And there, we've been operating in India. And we've said, okay, well, India has its laws, and we respect them. Here at Goldman Sachs, we respect people irrespective of their sexual orientation. And that's something that I've said before, during, and after the election of Donald Trump.
Unrelated to his views on diversity, do you think that he's good for business?
So there are certainly aspects of what the administration has delivered that have benefits. There's no question about that. So we could, for instance, talk about the tax reform, and it's an extremely complicated topic. But there's no question that while it did cause very significant capital write-downs across the industry, the one-time effect of tax reform, ongoing, it's a benefit. Now the question is, how are those benefits going to accrue to the society and the planet? And I think it's way too early to tell.
Well, we are way out of time, but I love talking to you. I hope you come back. I also hope that maybe you move. I know you're a native West Coaster, so I hope we get you back here someday.
You never know. Pleasure talking with you, Connie.
Thanks, Marty.
All right, cheers. Thanks.
All right, so we are going from the financial institution, so to speak, to the rising star of personal finance. I'm going to keep things moving. So with that, please welcome to the stage from Robinhood, Baiju Bhatt, and our moderator, Josh Constein.
So stock trading has always required a lot of money. You either needed to be trading a ton of it with a human broker, or you were getting charged $7 per trade. You came in and replaced those physical branches and brokers with software, and suddenly the per trade cost went to zero. That's led Robinhood to raise over $500 million at a jaw-dropping $5.6 billion valuation just 5 years after it was founded. But you weren't always so well capitalized. So how did you convince somebody to fund the crazy idea of giving away stock trading for free?
It was a crazy one when we got started. We had the idea a few years ago. Vlad, who's my co-founder, and I, good friends in college, and when we were sort of entering the working world, we saw what was happening with Occupy Wall Street in New York, and had been working in finance for a few years and had the realization that capital markets were ones that were really not letting a lot of people be a part of them, and that these $10 trade commissions were one of the major things. And we also had the crazy idea that if we made it free, if we made it really easy to use on mobile, that we'd see a new generation of customers joining this platform. So we took, our rounds up and down Silicon Valley, pitched the venture capitalists. They said it was crazy. They said young people would never invest. They said that this is something that you should have, a certain amount of money before you got started doing. And there were some tough times in the beginning, but we pushed through.
So what was it like getting that first check-in, especially before you were fully allowed to do this kind of trading through the SEC?
Yeah, that was one of the hardest parts. When we were getting started, we were in the process of becoming a broker-dealer, which is what we are today, to facilitate investing in the stock market. But the way that the financial system works is that without the regulations and the licenses in place, you can't talk about it. And so we talk to the VCs and be like, oh, I've got this great idea. And they'd be like, well, show us the customer validation that people actually want this. And be like, well, we can't because we have this regulatory thing. And they're like, this is a crazy idea. It's never going to work.
So at some point, you were walking around Palo Alto barefoot, just trying to save as much money as you could, biding your time until you could actually get this broker-dealer license. What was that experience like? Because I think when people hear $5.6 billion valuation, they just immediately assume you've been high-flying in mansions this whole time and buying fancy sneakers. But at one point, you had no sneakers at all.
No shoes at all. Yeah. So we had this time when we were getting started. It's a little bit of a history lesson of Robinhood. In order to get approved by the regulators to do this business, we had to first have a full year's operating capital on hand. And we found out about this right at the end of our application to become a broker-dealer. And we had this meeting with Tim Draper, who said he would invest. Now, he was kind of on the fence, and he was like, it seems like a good idea. This is going to be a pretty difficult hurdle for you guys to get over, getting this approval. And we made this crazy proposition to him, which is that if he would give us that first wave of money we needed to get our application approved, we would forego our salaries until we got the approval. And Vlad and I are both immigrants and children of immigrants, didn't grow up with a ton of money, had never really had a real job after college, and were basically out of money at the point. And so, yeah, there was a period of time where I started biking into work every day, some shoes with holes in them, walked around barefoot a lot back then. It was a tough time.
So that's pretty impressive to go to where you guys are now. But that said, when some people might say that a company going from a sub-billion valuation to over $5 billion in a year and a half means that there could be a fintech bubble or a crypto bubble, and that you could be overvalued. I mean, let's look back at what happened with Jawbone. There was a big fitness tracker boom in 2014. Jawbone raised at a $3 billion valuation. Everything's going great. They're killing it, right? By 2016, they're enduring a brutal down round, cutting the valuation in half. A year later, business ceases to exist. So how do you avoid that same fate with Robinhood?
There's a couple of things. The first one is our business is extraordinarily lean, and it has been extraordinarily lean from the beginning. So today we have nearly twice as many customers as E-Trade, which has about 4,000 employees. We operate Robinhood with about 250 people. So the unit economics of the business are really strong. Our overhead is very low, and we've always been a very cash-conscious company. So that's how we give ourselves a really, really long runway so that sort of stuff doesn't happen. Beyond that, our customers love our products. Our engagement extraordinarily high. We have our customers use our product on average 10 times a day. Like with that sort of utility and retention for customers, we think we're pretty well set up. And over the last 3.5, 4 years that we've been in market, we've transacted over $150 billion through our platform, saving over 5 million customers, well over $1 billion in commissions. So like we're adding real value to customers' lives every single day, and that's something we feel really strong about.
So does suddenly going from a small startup to being a multi-corn feel like success, or does it feel like pressure?
Feels exhausting.
Yeah?
Yeah, I would say it doesn't really feel like much of either. I think it's an interesting time for our company because we're growing from a smallish company in terms of headcount to one that has, as I mentioned, about 250 employees today on 2 coasts, and looking to substantially grow that number over the next year and the year following that. So those are some of the challenges that we face. I think obviously making sure that our service is rock solid, works every single day, and that we're continuing to build new stuff at the same pace that we did. It's a fun challenge, but it's a lot of work.
So it's pretty even-keeled, and they say that founders don't judge themselves by the company's absolute value, but just relative to yesterday. One lost executive or partner, or a new competitor or clone, or one security breach or bug, and it can feel like the whole world's falling down on you, and you can feel like shit.
Yep.
I mean, mental health is a huge issue amongst founders, and they often don't really want to talk about it. And this impacts high-flying leaders like you as well. And so maybe you could tell us, what do you do on those dark days when you don't really want to get out of bed? How do you motivate yourself when things are going to hell?
Yeah, I mean, certainly has happened over the years.
Yeah, just look at the price of Bitcoin.
Yeah. I would say a few things. The first one is that there's 2 of us that are co-founders, co-CEOs of Robinhood. It's myself and, like I said, Vlad. And there's something about having a friendship sort of behind the company that's so important to both of us that actually makes every single day that much more exciting. I think it also helps us keep a much more even keel because we're both people. We both have our idiosyncrasies and our weird tendencies and like, oh, we should really do this like really niche idea. But we do a good job of keeping each other's sort of tendencies in check. And when we make decisions together, we feel really confident that we've arrived at the best decision.
Was there ever a time when your investors were like, co-CEO, like, we know that doesn't always work. You can get a lot of headbutting. Like, one of you just like step up and one of you step down. Did that ever happen?
That's actually never happened, actually. we like to make a lot of fun of it, and I think that's maybe why it doesn't happen as much. But the interesting thing is that with NEA on our board, Scott has a co-CEO relationship there as well. So he's actually been very supportive of it, and as all of our investors.
So scaling culture is a lot different than just scaling a business. What questions do you ask potential hires to make sure that they hold your standards dear and aren't just chasing the paper money you guys are accumulating?
Yeah, that's a good question. So I do a couple of different things when interviewing people, and I think both Vlad and I try to stay very involved in the process of making sure that the new Robin Hoodies that join are aligned with a mission. I'd say the one thing that's very, very important for us, and things that we do like employee sentiment studies that come up as the biggest thing that drives happiness and engagement at Robinhood, is alignment with our mission. And that's something that actually motivates people to work that much harder, which is every single day. It's like, we're here because our mission is to democratize America's financial system, is to make America's financial system one where more people are a part of it, one where there aren't financial barriers that make it so that it's cheaper to be wealthy and it's more expensive to be poor. That's something a lot of people, I think, view as a real problem in society that needs to be addressed, and I think it's a really strong motivator for people at our company. So that said, the things that we like to ask for when we have new people joining is, when's the time you've overcome adversity? When's the time you've been wrong and you've learned from things that you're wrong? Do you have honest answers to this stuff, or are you just sort of coming up with things that seem like they're right? Are you a person that raises yourself to a high standard? Are you introspective? Things like that.
So you've been scaling that culture as well as the business. You guys now have over 5 million users. Robinhood Gold, your premium subscriptions, growing like 17% a month. You know, like you said, you now have twice as many customers as E-Trade. You know, that's scaling a lot. Eventually, those investors are going to ask for a return. You know, DST Global, who's led your last 2 rounds, they pumped a lot of money into this. So what's your long-term plan? Are you guys going to consider going public?
Yeah, absolutely. It's something that we're thinking about on the medium to long term. And actually, to that point, one thing which we're excited to mention in this is that we're actively looking for a CFO right now. It's something that we think is very much in the future for Robinhood. Being a public company, I think, aligns very closely with our mission as well. And it's definitely on the horizon. I think not in the immediate term, but something we're thinking about.
So I'm going to be able to trade Robinhood on Robinhood?
That'd be pretty crazy, wouldn't it?
Are you going to have some extra like fun bells and whistles to just like encourage me, or is that some kind of like manipulation of the markets?
I mean, I think there's got to be something interesting we can do there. But yeah, that is definitely something that we've talked about a lot internally, and would love to see that happen.
Do you guys have to go through like audits or other stuff to get ready for the IPO, or what's up with that?
So we, as a financial institution that's regulated by FINRA, the SEC, regular dialogue with the Treasury, like every financial regulator in the U.S., you name it, we work with them pretty closely, has actually given our business a really strong sort of audit and financial governance sort of set of requirements to meet well before being a public company. And so, of course, our financials are audited every year. Of course, our security practices are audited every year. All of these things we have been taking a really forward stance on, so that by the time it makes sense for the business to think about a public offering, we're years into doing the stuff.
Okay, so let's talk about crypto. When you launched Robinhood Crypto on February 22nd, allowing people to trade things like Ethereum and Bitcoin for a very low cost, basically as low as you can get it, at that time, Ethereum was at $849. Now it's at $286. So most everyone who bought Ethereum on your app is down. Do you feel any moral pangs or sense of regret about opening up crypto to mainstream investors?
So on the topic of price, looking at the price of cryptocurrencies, very candidly is not something that I do on a day-to-day basis. We opened up Robinhood Crypto to customers in the US because we thought that this was a big change that is coming to the financial system, and we wanted to make sure that if this was something that customers were going to do, that yesterday's business model didn't follow kind of tomorrow's financial system. So we thought that this is something that needs to be accessible to everyone. The costs need to be as low as possible. Can't be paying transactional fees on something that is going to be a motive of sort of moving money going forward. And we wanted to be a company that helps sort of set the stage for that. And whether the price goes up or down, I think we still believe that this is something that's going to matter long term. So we feel strong about offering it.
But I guess you could think of it that the barriers, whether those are the fees or the work that it takes to do crypto trading, that kind of protects the most unsavvy investors from getting involved. Do you ever worry that people who have no idea what they're doing, whether that's like someone's grandma or somebody who has only heard about Bitcoin on Mad Money or something like that, jumps into it and suddenly loses their shirt? Like, do you feel any responsibility for that?
I think our mission is very much to make these products accessible to people. We can't control the price of whether these things go up or down. And, taking the example of the equities markets, where some of these criticisms have been raised in the past, we feel pretty strongly that more people being a part of the system is better than fewer. And so that's pretty much how we think about it.
So speaking to that idea of like protecting investors, can we throw a screenshot up on the screen? I wanted to ask, do you moderate the chat boxes inside of Robinhood? I know that like on each of your crypto coins, there's basically a chat box with a bunch of people talking about how a crypto coin is doing. Is that something that you guys actually moderate?
We do, yeah.
And how does that moderation work?
We actually have two forms of moderation. We have human moderation, where we have a team of people that are going through the chat and moderating it and pulling out things that we think are poor quality content. And we also have automatic moderation. So we have a third-party service that we use that looks for either things like terrorist activities or things that people really shouldn't be saying and pull it out. And we also have the ability for people that are using it to flag messages to remove messages from the feed.
Do you guys find a lot of like pump and dump schemes going on in there? I mean, like just in this, you can see people who are like, buy this coin or buy that coin, or like, and I think I've heard from sources that especially during some of the runs on different coins, it can feel like people are actually using the Robinhood product to drive those pump and dump schemes.
So I don't think that they drive pump and dump schemes. We actually have a message that's pretty clear when you sign up, which says don't promote the price of stocks to go up or down. And that is something we're actively removing people for doing.
When you remove them, do you remove them from the chat box or from the Robinhood entirely?
There are different stages of it, and I'm not exactly sure what the process is, but there's a step where we'll first start, removing your messages from the feed, and if we see continued abuse, then we take further action. But this was something that we launched as an experiment. We had the idea that cryptocurrencies are really unique because they're the first financial phenomenon we've ever seen where there's real network effects. And we wanted to see if we could bring the actual conversation that drives the network effects into the product. And as an experiment, we think it's a really interesting idea. And yes, we probably, as we go forward, will continue to make the moderation stronger and more robust. But yeah.
So does Robinhood hold the private keys for crypto wallets that people have with the company, or are those held with a different exchange? And like, who runs the order book? Are people trusting Robinhood, or is that trust being kind of passed on by you guys to a third party?
So we hold. So I need to go back and actually make sure I have the latest information on how we're doing this, because we've been transitioning between different counterparties that we use to custody the coins, and we'll eventually be custodying them ourselves. But we route the orders to a variety of third parties, and we look at the best available price across all the different venues that we connect to and show those to customers.
How do you decide new cryptocurrencies to list? Because I know some exchanges get paid like millions of dollars to take on a new coin.
We do not get paid. We do not get paid. We do not pay anyone to list new coins. We have a listing committee and a listing procedure, which I believe is actually available publicly. I don't want to misparaphrase it, so I'll probably leave it at that.
So what's your plan for monetizing crypto directly? Is that part of the plan, or are you going to just mostly use it as like a loss leader and driver of your traditional stock trading functionality?
Our goal is to be able to offer it sustainably, which means we want to be able to break even and cover our costs of running the business. But yeah, we believe that if we build more and more services that are awesome for our customers, we'll be able to continue to make money off of the ways that we do so.
So does that mean like bringing margin trading to crypto, even though there's like mass volatility?
I don't think we have any plans to bring margin trading to crypto. But we've seen people that come in because they're interested in crypto. A substantial number of those people say, hey, maybe I'm also interested in investing in equity markets. They do that. A certain percentage of those people are people that turn into or are already more prosumers. And then we see those customers adopting things like Robinhood Gold.
So you guys are on a bit of a collision course with Coinbase. How are you going to beat them? Like, what's Coinbase's weakness that you can exploit?
This narrative has been brought up a couple of times, and I don't really see it. I think we have a pretty different set of things that our business is trying to do. I think Robinhood is squarely focused on being a consumer business. I see Coinbase as one that's trying to do all things crypto. And I think long term we will see, and I could be wrong about this, where this is a point in time where our products have had similar trajectories, but they largely have very different missions as companies.
And so finally, what is your advice that you could give to Series A stage founders on their funding and personal journey, hoping not to go crazy as they join the unicorn ranch?
Yeah. One, it takes much longer than you might think it does. And two, get ready to be wrong a lot. Three, make sure you've got a good co-founder, because otherwise you will absolutely lose your mind in the process.
Cool. Well, from going to Barefoot to having 250 employees, yet 2 times as many customers as E-Trade, building a friendship and a co-CEO to keep you sane, finding mission-driven people who actually want to work there to democratize finance rather than just get rich. Now you guys are actually getting a CFO, trying to make crypto accessible, even though there might be risks to making it accessible to everyone, and making sure that you're keeping them safe with moderation and not giving them too much margin trading that could let them lose their shirt. I'm really excited to see where this goes, but mostly I just think it's really admirable for the children of immigrants to go out there and say, hey, we want to bring financial inclusion to a whole new generation. So thank you for coming and talking with us.
Thank you.
Ladies and gentlemen, please welcome TechCrunch senior writer and your Battlefield host, Anthony Ha.
Hello, hello. Welcome back to the Startup Battlefield. Those of you who were here yesterday know exactly how this works. We're going to have 5 startups on stage over the next hour. They're going to present for 6 minutes, and then there's going to be 6 minutes of Q&A from the expert judges. Check TechCrunch tonight, and you will see a list of all the finalists. Those finalists will be competing tomorrow for $100,000 and the Disrupt Cup. And with that, let's bring out our judges. First up, we have Chantel Garvey, co-founder and general partner at Reach Capital. She invests in educational technology companies focused on access and opportunity. Next up, we have Aaron Patzer. He was the founder of Mint, which was basically the first winner at a TechCrunch startup conference. Last year, he started Vital Software, which makes software for hospital emergency rooms and aims to cut ER wait times in half. Next, we have Catherine Ulrich, Managing Director at First Mark Capital. She invests in a broad range of enterprise and consumer startups. Previously, she was the Chief Product Officer at Shutterstock and at Weight Watchers. Next up, you may recognize him from earlier today. It's J.D. Vance, Managing Partner of Revolution's Rise of the Rest seed fund. He also wrote the #1 New York Times bestseller, Hillbilly Elegy. And last but not least, we have Ellie Wheeler, a partner at Graycroft based in New York City. Previously, she worked at a similar role at Lowercase Capital. Give it up for our awesome judges. And with that, it is time to start this battlefield. Let's bring out our first company, CB Therapeutics. Presenting for CB Therapeutics are Cher Ali Butt and Jacob Vogan. Coming out.
Bud, Mary Jane, weed, chronic, negative terms associated with crime and degeneracy. You've probably heard these terms before as slang for cannabis. THC, CBD, cannabinoids. You're probably less familiar with these terms, but they've been shown to have medical benefits as the compounds contained in cannabis. Hospitals at UCSF and UCLA have recently demonstrated that cannabinoids mimic compounds already found in the human body. Today, cannabis support in the public opinion is at an all-time high. Why? Well, aside from recreational uses, cannabinoids have been demonstrated to have medical benefits for a suite of ailments. The rise of legalization globally means reduced crime, greater medical applications, and tax benefits for social programs. Cannabinoid products already exist in the market today, but they're riddled with quality and supply chain issues, such as contaminants, long supply chain, and different batches on each crop. CBD and THC are the 2 most abundant cannabinoids in cannabis, but what you probably don't know is there's 120 other cannabinoids that are less than 1% of the cannabis plant. And therefore, these compounds are hundreds of thousands of dollars per kilogram. Introducing CB Therapeutics, a biotech company that produces pure cannabinoids using a biosynthetic, contaminant-free, and easily scalable process. Our proprietary process extracts the genes from cannabis and expresses them in yeast. Once the yeast starts fermenting, similar to basically making beer, we're able to extract pure cannabinoids from it. Let me show you how this works. Move to the demo, please. So the initial step is just to take the sugar and the yeast and mix it together into a bioreactor. The bioreactor optimizes for yeast growth, and after 5 days of fermentation, we're now ready to harvest our crop of yeast. We do the extraction process by a simple non-volatile technique followed by high-performance liquid chromatography purification, leading to pure cannabinoids. Move to the PowerPoint, please. CB Therapeutics is unlocking rare cannabinoids with unique properties. Our platform has the ability to decrease costs by 10x, reduce production time to just 5 days, all while delivering a purer product. At CB Therapeutics, we're unlocking new therapies using these rare cannabinoids for pain, anxiety, cancer, and more, eliminating the need for dangerous drugs such as opiates, which killed over 35,000 people in the United States alone last year. We have indirect competitors that use plants such as General Hemp and GW Pharma that produce a moderate to high price point product that's usually contaminated with pesticides or other heavy metals, and you're only limited to 2 or 3 different types of cannabinoids. We also have direct competitors, companies that use some form of biosynthesis, such as Hysynth or InMed, that produce a low to moderate price point product that's relatively pure. However, these companies are years away from scaling up and manufacturing in the California cannabis market. CB Therapeutics produces a pure product that's price competitive, and we're going to be the first ones to commercialize and manufacture here in the California market. The cannabis market in the US last year was $8.2 billion, and California alone was 45% of it. In the future, we're looking at other markets such as pain and anxiety, which has a combined market value of over $73 billion. We filed our patent in 2016, and we are awaiting decision in the next 2 months. We've also verified production of 15 different cannabinoids in our yeast using the Scripps Institute and other third-party testing labs. And up till recently, in fact, 6 weeks ago, we acquired all the assets and manufacturing facility for a previous biotech company here in California, enabling us to be the first biosynthetic company to start scaling up and manufacturing. This is our product, which is pure cannabinoid isolates. Initially, we're going to sell it to customers in the cannabis industry, some of whom have given us LOIs for over $250 million. These companies are in Europe and North America. In the long run, our plan is to partner with other research institutions like the UC system and take these rare cannabinoids through clinical trials with the hope of getting FDA approval for some of them. Our team has deep domain expertise in synthetic biology and cannabis science. I was lab director at Steep Hill, the largest cannabis testing lab in the world, and I also worked for Novartis, commercializing drugs with the FDA. Jacob has a PhD in bioengineering from UC Berkeley and has 16 published papers in this space. We have a team of experts in synthetic biology, analytical chemistry, and bioinformatics on our team as well. CB Therapeutics is changing the face of the cannabis industry by providing rare cannabinoids for new innovation in healthcare, pharmaceutical products, and affordability for consumers. Join us at www.cbthera.com. Thank you.
Okay, judges.
Can you tell us about the, I guess, customer experience? Basically, how does it feel?
It's it's the exact same thing that the plant would make. So, our focus right now is on CBD. So technically, CBD doesn't actually have a psychoactive effect, but it does have more of a relaxing effect. The benefit of this technology is that it's actually bioidentical. So typically, when you have a synthetic product, it's different in nature. With this, we're using actual plant enzymes, so it's exactly 100% the same thing that the plant would make.
And I could imagine there might be some challenges going from pilot production now to full-scale production. So can you just talk about maybe what some of the production challenges may be, and then how you're going to ensure quality assurance throughout the process?
Great question. So with this new facility that we just acquired, it's already a full-scale pilot manufacturing plant. We're bringing in people that are experts that have actually set up that facility. We don't think that based on the team and the facility and where the technology is that we're going to have too many challenges in the future. But again, there may be unexpected unknowns in the future.
One question on the process. How unique is this in terms of the process you're running to develop them? And can it be used for other compounds outside of CBD in the future?
Absolutely. So it's unique in the sense that we're patent pending. This platform can be scaled up for other different types of compounds. In fact, we're getting some companies that want us to manufacture stuff outside of cannabinoids that we may look at some point.
Okay.
Could you talk just a little bit about clinical benefits in the context of customer need? Because what I'm trying to get a sense of is, for example, you compared the clinical outcome, or at least the need to opioids and pain. It's hard for me to believe that a product derived from marijuana could be as effective at pain management as Percocet, but maybe that's wrong. I'd love to just hear what the evidence is on the clinical efficacy.
You're absolutely right. You know, some very strong opiates, there's nothing that can parallel that effect. But there are some effects of pain relief that you're able to maintain with CBD and other cannabinoids. When it comes to the rare cannabinoid side, there's so many of these compounds, except for maybe 3 or 4, that haven't really been tested. Because they're so rare, just doing a clinical trial would be millions of dollars. For example, there's some new cannabinoids that have been shown, one called THCV, which has been shown to suppress appetite, ironically, and it's found in cannabis. There's another one that has been shown to be a bone stimulant. So there's so much that we don't know today, and that's the whole point, is we need to be able to manufacture these products in a cost-effective way where we'll be able to do clinical trials with them.
So you said you're starting in CBD, but you did talk a lot about some of the other more rare compounds. So what does starting in CBD mean to you? So are you actually selling to some of these skincare products that we're seeing, some of the more kind of CPG type applications, or what does it look like?
Absolutely. So we have almost $300 million in LOIs, and I think at least 200 and something of that is just for CBD, for companies that want to put it in skincare creams, lotions, shampoos, things like that. As far as the other compounds go, I think the biggest thing for us is looking at where the market is going. So when we go out there and talk to customers, we initially thought that we would get a lot of orders for THC, but that's not even something that people really want that much. I think they want something that's easily, shippable, that doesn't have too many psychoactive effects, that has medical benefits. So in the future, we will commercialize the other ones as well.
What's the regulatory environment that you're in, and how long will it take you to actually get this to market?
So in terms of regulation, the way that it's going to work is in California, you can't sell anything until you have a California cannabis manufacturing license. In fact, you were able to import CBD from hemp into the state. That's been banned about a month and a half ago. So anything being sold here has to be manufactured within the state. So from that perspective, we're about 4.5 months from getting our state approval.
And at that point, you'll be able to sell?
We will legally be able to manufacture and sell the product, yes.
Can you talk about how much of this you've actually manufactured in terms of pounds, kilograms, tons?
So we've demonstrated that it works by doing third-party testing. As far as manufacturing large quantities, that would be illegal. So we're waiting to get the license before we are starting to manufacture and sell the product itself.
So then how do you know how much it will actually cost? I guess part of this is getting to the fact that there's a lot of marijuana in the market. It's very highly profitable. I don't, at this point, see why there's a tremendous benefit to having something that's a tenth the cost, or even where you get that number from.
That's a great question. So the first part of it is we have estimates of how much the production facility costs in terms of running expenses, the people, the scientists we bring in there. We've also gotten third-party quotations in terms of how much it would take to outsource production at a biopharma facility. So that number is derived from, analysis of those. In terms of the second part, I think, no matter how efficient plants get, they will not be able to make these rare cannabinoids in large quantities. So we see, it takes 10 years to breed, cannabis strains that are 5% higher in THC, for example. I've been testing cannabis since 2009 at Steep Hill. It took 10 years to bring cannabis strains from 5 to 7% CBD all the way today to 20%. So it's going to take another 10, 15 years for these rare cannabinoids with plant genetics to catch up. And until that happens, there's no alternative.
Speaking of... I'm sorry, we're out of time. Give it up for CB Therapeutics.
Thanks.
Okay. Let's bring out Lori. Presenting for Lori are Josh Sandler and Jean-Claude Homowu.
Hey everyone, I'm Josh Sandler from South Africa. This is Jean-Claude from Togo, and with Gashini, who's in Nairobi, who's from Kenya. We're the co-founders of Lori, the company powering logistics in Africa. When you purchase something in Africa, you pay significantly more than you should. Why? Logistics. If the continent had the US cost construct as the US, you would be paying up to 1/3 of the price. whether that's fertilizer, cement, or a bag of grains. This is a pain point we have felt our entire lives, and the logistics system on the continent is broken. Poor logistics drives product cost inflation, which limits consumption, hinders export potential, and prevents global competitiveness. Let's look at Cargill as an example. When Cargill, one of the biggest movers of commodities on the continent, who's responsible for getting grains to millers who make flour for the consumers to feed the population, when Timothy from Cargill, the head of logistics, has to get trucks, he'll call 40 different transporters, 30 of whom answer their phone, 20 will confirm availability. Out of those 20, 10 will come to final terms, but on the day of, only 3 show up. You ask Timothy why and those in the market, and they say, the reason we can't get our product to market that's impacting our bottom line is because the truckers are evil, terrible human beings. But that's not the case. The transporters often go to the farm to pick up the cargo, only to find that an equipment is broken or customs clearance documents aren't ready or any of the other emerging market externalities have occurred, and they'll wait for 3-4 days, not being able to make it to their next pickup. As you can see, there is a lack of coordination and a lack of flexibility in the system, which is driving heightened costs and preventing this global competitiveness and efficient consumption. Enter Lorry, the company powering logistics in Africa. Lorry provides this flexibility and centralized coordination that does not currently exist in the system. Lorry is a marketplace platform that gives cargo owners unparalleled visibility into their entire supply chain of trucking. Lorry, if trucks are delayed or stalled, Lorry will redirect other trucks to those locations for pickup. It will optimize assets, which leads to increased truck utilization and decreased costs. In just 4 months, Lorry was able to bring down the cost of moving grains to Uganda by 17%. We now move about 40% of the grains heading to Uganda. Move to demo. Lorry collects data points throughout the entire journey to power decision making. We provide our customers with easy-to-use dashboards that give them insights into their entire supply chain of trucking. They can see loading times, offloading times, delays. They can better plan inventory through the system. Let's see, for Kenya Cargo, when a truck is delayed, they'll be notified. They'll have visibility into it, and we'll redirect another truck to go pick up that order. We provided the customers further with push notifications that are consistent and give them peace of mind. On top of that, they have access to our 24/7 customer service center to help them with any of their needs. Let's move back to presentation. We have a deeply experienced team who come from experts in logistics, finance, technology, operations. We have people who have led divisions of Maersk, led product at Google, people who have run $100 million supply chain businesses, and I, with a dual master's in econ and business from Harvard, wrote my dissertation on how technology can drive logistics efficiencies in Africa. The past few months have been pretty wild for us. Last October, we were at a $6 million run rate of revenue with 10 cargo owners and 300 trucks. Since then, we have grown exponentially. We now have 70 cargo owners, 3,000 trucks, and went from 1 country to 4 countries. We've contracted with some of the largest movers of cargo in Africa, Kunanago, Cargill, Procter & Gamble. Many of these are using Lorry in East Africa as their exclusive providers for transportation services. We're pushing the rest towards that now. The market for moving cargo on trucks across Africa is huge. $180 billion today, expected to grow to $500 billion within the next 20 years. Right now, we operate in Kenya, Uganda, Rwanda, and South Sudan, and plan to expand to 4 new countries within the next few months. Global e-logistics heavy haulage players include Blackbuck in India, Convoy in the United States, and Manbang in China. These players lack the necessary partnerships and context of Africa in order to grow there. We, as Lori, remain the only proven, scalable, tech-enabled solution for moving your cargo across Africa. We invite you, if you're a multinational player looking to reduce your costs of moving goods in Africa, to join us today by visiting www.lorisystems.com. Thank you.
All right, judges, here's a question.
Sure. Thank you. That was great. So today, where's your constraint in the business? Is it any marketplace, right? Is it the demand or the supply side today?
Right now, it is a bit more of training up the drivers to be on the professional level that we intend for it to be on. A lot of the drivers have the infrastructures, it's the compliance and onboarding that become a bit of a constraint. But we have been developing better systems for onboarding, training mechanisms, and whatnot to provide better solutions overall for the whole market.
So you talked about some of the other players not being able to build the on-the-ground local relationships, and sounds like your team is able to do that. So can you just walk us through what that looks like? How do you build those partnerships? And then if you're going to expand, how do you kind of scale that partnership building to make this work?
Sure, there's a number of ways we can think about it. So the reason why these international players are not able to enter the market is because of these sort of local dynamics. Right. For instance, in speaking with transporters in the market, we ask them, what's your biggest pain point? And it's managing drivers. For instance, drivers might siphon fuel from the trucks for a variety of reasons. These are problems that we believe we can solve with product that help align the incentives of the drivers, the transporters, and the cargo owners. So these are really things that allow us to build our presence in the market and defend really the early mover advantage that we have.
Yeah, just to describe another example really quickly, when we had another trucking company paying offloading facilitators to underweigh our trucks, our relationships and networks in the market allowed one phone call to make that trucking company stop bullying us. And those kind of relationships become very localized, but we have been building these Pan-Africa relationships for 20 years.
And so when you go to a new market, you build new relationships, or do you get people on the ground? Or
we're expanding a lot with our current customers, and then as well as with new providers who we've been developing.
So the relationships with these multinationals that we've built, obviously these multinationals are Pan-African, right? So once we do a good job in a given market with them, we're able to scale to other markets by working with them and leveraging those relationships.
You talked a little bit about the driver experience. Can you tell me more about that? What does it feel like to be a driver today, and what will it be on your platform, and how will you align the incentives?
Being a driver is tough. I mean, these guys are really, really skilled. I've been ridden on a lot of trucks. They'll have like an inch on each corner and be maneuvering through alleyways, essentially. They're exceptional. Right now, it's tough. You're on the road all the time. You're never with your family. You're just being yelled at. There's a lack of respect. These are like lower income individuals who are hustling to get by, and they don't have the respect. So they're incentivized in many ways to, they're encouraged to fuel siphoning and other forms of salary and revenue. So we're working with them to better incentivize the process. The drivers now call us when they have issues because we don't scream at them. And they have started pushing a lot more information to us, so we have better visibility into the entire ecosystem.
But what's their upside? Are they going to make more money in your platform, and if so, why?
Correct. So they will be able to collect their payment much faster because of the methods we will be using through the product. I'm happy to give you additional detail on that, because I think that is part of the secret sauce for us, is really creating additional value for drivers that is currently not available to them. Like Josh said, they're really at the bottom of the pyramid today. We think that with these services, we will give them a lot more power and a lot more control into their ability to do these gigs and get paid in a timely fashion.
And just to tie that all together, we increase their asset utilization so we can take a margin on the business because they do more trips per month when they're on our system. and we do some other financing products that support them.
You have mentioned 3 times in the Q&A what would be called theft or corruption, either on the driver's side or along the way. On your website, you say that 76% of the cost of goods is logistics and transit, whereas it's 6 or 7% in the US. That's a huge discrepancy. How much of that is innate to bribery, poor infrastructure, poor rule of law, poor enforcement of being able to go after people who take an entire truckload of things? How far can you drive that down, and how do you solve those problems?
So we've done 7,000 trips in the past little while. Actually, I'm not going to say the exact dates. Out of those, we've had 0 of any incidences on scale in the last 7,000 trips. And just to tie that all together, people use these as excuses. They say the road's poor, so it has to be a high expense and all that stuff. Mombasa to Nairobi, it takes 12 hours to go 300 kilometers. That's not great, but you're doing 1 trip a week. So that's not what's driving the utilization factor, isn't the infrastructure. It's an easy excuse out and to say, hey, look, it's the optimization of the assets.
Bribery and corruption.
We've never encountered it. Like everyone.
You mentioned siphoning gas twice, as well as the weight of your trucks.
Siphoning gas is perceived in this context as essentially a waiter at a restaurant having a meal at the end of a meal, having a free food at the end of the meal. It is normalized and it is perceived. It is not perceived as illegal or corrupt. It's known as being probably not the best thing to do, but they're seeing it as an opportunity.
So for those of us in the West who would see that potentially as theft, what you're basically saying is over there, if I don't consider it illegal, it's not, and that makes me uncomfortable as an investor, for example.
I think there's a clear line. Sorry, what's that?
Answer quickly.
Okay, sorry, you go ahead.
So listen, clearly of that gap, right, of that difference in margin, there's a big part of it that we won't be able to directly affect.
Right.
However, a big part of the cost component is due to operations, allocation, and utilization. Yep. Those things can be resolved with software, and that's what we're here for.
Cool. All right, one more round of applause for Lori. All right, let's bring out our next company, KidSense. Presenting for KidSense are Kaveh Azartash and Jock Thompson, and I believe a special guest.
Wow. Well, we couldn't be more excited to be here introducing the first Edge Voice AI solution for children. Now, if you're a parent, you may recognize this. This is how my daughter looks when her smart device doesn't understand her. It's pure frustration, only followed by anger and sometimes yelling. Almost all of our devices are, or soon will be, controllable by voice. But kids' linguistic patterns are so different than adults that speech recognition's built for adults just doesn't cut it. And what's more, even doing it poorly, many of these devices process their speech online, putting our children at risk and potentially violating several new kids' laws. I mean, do we really want to keep seeing headlines like this? Kids' speech recognition is a bad experience for kids and parents alike. Meet KidSense. We enable kids to speak to technology securely by providing our SDK to device makers who put them in smart speakers, wearables, toys, and apps. KidSense is the first and only Edge Voice AI solution built for children. Now, Edge AI means we take large algorithms and process them locally on a hardware device. It provides better privacy, latency, reliability, and cost. The cornerstone to any children's Edge Voice AI solution is a powerful algorithm to convert their speech to text accurately. When I first met my partners, they had already spent several years building children's multi-language development and speech assessment tools. The byproduct of this was an amazing amount of phonetically rich, clean, and tagged children's speech data. This is what we used for the foundation to build the best possible voice solutions for children under 13. Let me show you how this all starts. Let's move to demo. So what we've done is we've taken a device and we've built a small demo app to show you the results. And then we loaded a 10 megabyte KidSense speech recognition solution, and we put the device, as you can see up there by the airplane, it's in offline mode. And what good would a kid's product demo be without a kid? Hi, what's your name?
My name is Zoe, and I'm 9 years old.
All right. Hi, Zoe. Now, do you mind saying something into this device for me?
I'm a little nervous to be here, but my mom said I can do this.
Excellent. So as you can see, we've converted Zoe's speech to text real time on a device that's offline. So no data is shared in the cloud. And guess what? Zoe's not frustrated or yelling. Right, Zoe?
Mm-hmm.
All right, Zoe. Would you say one more for me?
This summer, I went swimming and had lots of fun.
Now, because KidSense operates offline, we don't have connectivity issues. Better latency and better reliability means better user experience for our customers. Zoe, you got one more for me?
When I grow up, I want to be an engineer.
Now, okay, because we process Zoe's speech to text online, we actually have the ability to select what data does go to the cloud or what data gets blocked. This is only possible because we process her speech to text data offline. Zoe, great work. Thank you.
Bye.
Yeah, you crushed it. Now, more than just speech recognition, our team has spent 4 years building the model that provides our solutions. It starts with the data collection, which we use with our deep understanding of language acquisition to build children-specific sound maps and algorithms to train our neural networks. And finally, we use our proprietary method of quantizing neural network architecture to build children's edge voice AI solutions on devices using minimal processing power and memory. Now, I mentioned earlier there's several new children's privacy laws. These are COPA, GDPK, and CCPA. These laws threaten huge fines, and they're actually driving demand to our products from the makers of children's interactive products. And the other thing these laws are doing are creating really big barriers for all competitors who need to collect the targeted children's data to build solutions like ours. Now, compared to the other voice AI solutions out there now, we differ by offering kid-specific solutions, predictable pricing, privacy, and maybe most of all, a long history of dealing with children's data. This unique value proposition lets KidSense target the makers of the 1.6 billion devices that will be sold annually and be assessed by children under 13. So we've got traction. Sorry about that. We've got traction already. It's pretty incredible, actually. We're already working one of the top 3 chip makers, a top toy maker, a top entertainment company, and several robotics companies. None of this could be done without our amazing team. We're PhDs, AI scientists, experienced entrepreneurs, and mostly, we're parents. So if you're a parent, a grandparent, aunt, uncle, or friend, look for products powered by KidSense and keep your kids safe and happy. And if you're building interactive children's products, you're going to need an edge voice AI solution that provides the best privacy, latency, reliability, and cost. Visit us at www.kidsense.ai. Thanks.
Okay, judges.
So a lot of the parents I know are trying to get their kids to disconnect from electronic devices, and that's a pretty big topic if you have a kid under 5 or 10 years old. And I'm just wondering, are you a little worried about, to be frank, what I'd call the creepiness factor of making it easier for your kids to exchange with Amazon or Google, or whatever the case may be, as in an era where a lot of parents are saying, we want our kids to spend less time on their mobile devices, we want the kids to spend less time with electronics?
Yeah, I mean, the quick answer to that is there's a several range of devices, right? So we work with toys and a remote control that works with a kid. I mean, it doesn't always have to be a digital device. The reality is sound is the new touch. I mean, there's no getting around it. So having an experience with these kids it's going to be sound-based. It's not always touch, and it's not always display.
Did you think about other applications for the technology? You guys talked about word processing for kids, things like that.
Several products on the roadmap, anywhere from kids with learning disabilities. It's a big one. Yeah, so there's several products on that roadmap. But again, it all builds off the foundation and the building of these algorithms that we've already started.
What are you guys seeing? I mean, you mentioned some numbers on the demand in terms of some of the players, but what does the average contract value size look like? What are people willing to pay for this? And the thing I'm looking at is the bars of how much better you are versus other large players in the market, and just how much people are willing to pay for the delta and the performance.
So we actually don't charge much delta in the performance if you look at what competitive products are out there now. Like the embedded guys charge a licensing fee. We're actually, in some cases, under them. So we're not asking anybody to pay more for that fee. Now, to be fair, in some instances where it's a device that has an adult speech recognition solution, where we would add a kid speech recognition solution, that would increase the price. Down in the toy range, they don't have an adult speech recognition, and that's where margins are the tightest. When we start to get up into smart speakers and robotics, they have such great margins that they're not really pushing back at all.
Can you talk to us about what I would say is more the actual market size? You say 1.6 billion devices that kids will interact with, but I mean, really, like what your specific market size in terms of how many chips go into toys and what that size of market actually is.
So
is this
that
a $500 million revenue? Could it be $1 billion revenue? What's the potential here?
Okay, so the of the 1.6 billion I mentioned, so 1.2 of that is smart speaker.
Okay.
The other 400 million or so is actual kids' interactive products and wearables. If you were to talk to Qualcomm today, I think they would, I mean, I don't want to speak for them, but they would argue that kids' wearables and speaking to kids' wearables is one of their top markets they're going after. So I think the 400 million could grow, but I mean, that's the number we have right now.
And do you think you'll get $1 per device, 50 cents per device? What do you?
Yeah, so without getting too deep into it, so you start with a kid's device or a kid's toy product. Margins are extremely thin. So we actually work with integrated circuit guys there and make limited margin on huge numbers. Okay. But then as you see that matrix go up, we get into robotics and smart speakers. Again, the pricing goes up, but the volume certainly goes down a little bit.
I'll let you get away with a non-answer there.
So you talked about one of the value adds being privacy. And can you just double click on what you mean by this is a better privacy experience? And then also, I imagine you are collecting a lot of data about what kids are asking, or does that data live on your servers? Does it live in the supplier servers, or how does all of that work?
Sure, yeah. So we collect the audio samples from kids, but we never share the audio speech data with anyone. We constantly assess the text-based data, right, to basically build better domains, basically up the efficacy of our ASR models and all of that. There is never any data that will leave our, what's it called, the hardwares, right? So being the speakers or toys and all that, data stays there forever.
Also on the privacy point, do you envision it being an open SDK, or are you vetting somehow the people who are able to use it?
So we have multiple offerings, actually, right? We have an open SDK for command words, things like call mom, open door, right? We also, on the bigger models, on a more general ASR, we actually have, again, different offerings for different model sizes, anything from like 1,000 word all the way to about 50,000 word, right? So down the line, there are more opportunities, to do some of that. But at this point, the open source is only on our command words, which is basically for kids, sort of smart watches or low-end toys.
Any last quick questions? Again? All right, give it up for KidSense. Give it up for Zoe.
Thank you.
Okay, let's bring out our next startup, Fiber. Presenting for Fiber are Obina Okwodo and Dami Ademushan. Come on out.
Africa is the world's next frontier market. Let's take Nigeria, for example. Every year, $3.5 billion is poured into the residential real estate sector in that country. But this is nothing compared to the $420 billion that is required to house one of the fastest growing populations over the next few years. What this presents is an incredible market opportunity, but there are currently two factors that limit investments into this sector. The first is that investments is restricted to big-ticket investors who typically pay cash down for property. There is currently no way for the everyday retail investor like you and I to participate. And the second is that the rental market is extremely fragmented, making it really hard to find, vet, and manage tenants. As a result, it is difficult to extract rental income from property. I've spent the last 2 years solving this second problem. After graduating from MIT and working in Morgan Stanley's real estate team, I moved back to Nigeria and teamed up with Tunde, an Andela engineer, and Demi, a behavioral economist, to tackle this problem. Over the years, we have generated over $1 million in rental revenue for our partner landlords and have an occupancy that's over 97%. But while running this business, we've realized that there's an incredible opportunity for increased investments into the real estate sector. And as a direct response to that, we're introducing Secure by Fiber. Secure is a platform that allows anyone, anywhere, invest in real estate on the continent and get a return, a rental return, without ever having to lift a finger. Through the platform, property owners and developers can list their assets for sale, and investors have the ability to browse available properties, acquire entire or fractions of assets, and receive rental income directly from Fiber. Let's show you how this works. Move to demo, please. Now, Maria is a middle management at a bank in Nigeria, right? And she's been thinking about ways of investing her money and growing her portfolio. So she comes on our website, right? On the website, she can browse through available properties, right? She likes this one, this specific one in Lekki, which is a growing neighborhood in Nigeria. And right on there, she sees all the information that she needs, right? And she can request ownership verification documents. She can schedule a viewing if she wants to, just to get comfortable with her purchase. She does these things, and she's finally comfortable, but she doesn't want to buy the entire thing. She wants to dabble, so she wants to buy a fraction of it. Right? Now, the good thing is that we've broken these properties into blocks, so she has the ability to do this. Right? And this is what she does. Now, she makes an offer for 2 blocks of this property, right, representing 20% of it. Now, once she does this, she completes her offer process, and once her offer is accepted, she gets an email with the documentation that she needs to sign and details about how to make a payment. We hold these payments in escrow until the entire transfer process is over, after which we slide these assets directly onto our rental platform, and she can begin earning rental income on her property. Take me back to the presentation, please. Now, how do we make money? We charge a 3% service fee on all sales that happen on the platform and a 15% fee on all leases that happen on the platform. And as for competition, well, locally, the only competition that exists are online agency platforms. And what these do is they allow people to list their property online for sale, but don't help with the actual sale process and don't help you find tenants for your property. Now, there are other buy-to-let options that exist, but they are not playing in the emerging market space, and certainly not Africa like we are. And in terms of the market, well, it's about $50 billion bought and sold in real estate on the continent right now, right? Which leaves about a $2 billion revenue opportunity for us. We imagine that as we scale to other emerging markets and we increase participation in the space, that grows to be about $25 billion. We're launching the platform with about $10 million worth of property to be sold. And as a function of the partnerships that we've already penned with some of the biggest developers in the country, Nigeria, we plan for this to grow to $50 million in 3 months. Now, let's step back a little bit. Ladies and gentlemen, what I've just showed you is a platform that allows anyone, anywhere, invest in real estate in the continent and receive rental returns. This is one of the fastest growing markets in the world, and through this platform, anyone can partake in the tremendous growth that will be Africa in the coming years. Thank you very much.
Questions?
Can you say a little bit more about just the strategy to secure some of these investors? So, for example, how does Maria even find out about your platform? Or if I'm an investor, how would I find out about fiber, and what are the kind of costs associated with?
So the initial market that we're targeting are local people in Nigeria, right? And we plan to use online marketing to reach them, but there are a lot of people who are already in our system that we can reach. But there's another market, which is the diaspora market, who buys a lot of real estate on the continent, right? And that's a very easy target for us as well, and online marketing will help us with that as well.
Why focus on individuals and not institutions? So, allowing hedge funds to, invest in pieces of the rental stream.
So we're definitely doing that as well, right? There's going to be a consumer-facing product, but there's also a product for institutions to invest as well, and we're already having conversations with them.
Are you doing any financing behind this, or you're buying the properties purely on cash?
Not yet. So right now, we aren't necessarily financing anything, but we're having conversations now with bigger pension funds and bigger institutions, right, to help us front these purchases. So it works similar to an open door model.
And quick question, how do you handle the ownership? If I own 20% and eventually want to sell or the entire property, how do you handle that when it's a partial?
Right, so we're creating SPVs. So when you actually make a purchase, you're purchasing interest in the SPV. So you can enter and exit as you please.
Can overseas investors trust investing in the Nigerian real estate market? I looked it up in the World Corruption Index, and Nigeria ranks 148th out of 180, which is pretty bad. So how do you build trust with overseas investors? I understand how it would work with locals, but for people overseas.
So the way I imagine this works is that I don't imagine that right off the gate we get a lot of international or overseas investors interested. I think there's a beachhead market, which is the diaspora and the people in the country, and I imagine that as a function of the work that we've done with that set of with that initial market, that we'll be able to convince more overseas investors to participate.
But if I have a dispute, for example, what is the rule of law like there? I mean, I understand maybe these are naive questions, but they're the questions of a foreigner.
Yeah. So, I mean, in the event of a dispute, the governing law is in Nigeria or wherever country that the property is domiciled in, right? And there's a legal process that can be followed.
How do I make sure that you're getting me the best price when I buy a property through you, especially because you're incentivized to get 3% of the price? So in some ways, you're incentivized to have me pay the most.
We're also incentivized to sell the property, right? And so it's also in our interest to make sure that the price is low enough that people are interested in the yield, right?
Because you buy it first before I buy it as an investor?
No, we don't buy it. So we show you the prices as well as the rental yield. So in a way, our incentives are aligned with you.
Okay.
Yeah.
I'm just wondering the success of Nigeria as a country and the success of the product. And what I mean is, does Nigeria eventually reach a critical mass of growth where the legal institutions have matured, the consumer mortgage institutions have matured, and effectively it becomes such an advanced economy that people don't need secure by fiber? They'll just do mortgage investing in the way they do it in the United States or in other countries.
So we definitely imagine that happening, but instead of fiber being an alternative or secure by fiber being an alternative, we imagine that we will be one of the engines driving that process, right? And so we will have the ability to kind of have the customer from the beginning and be the entity that creates that change.
So basically the plan is to transition. As the need transitions, you guys
Exactly.
will own the customer, but you recognize the need to transition the product.
Exactly.
Have you looked at any other markets beyond Nigeria that you want to move into?
Oh, certainly. So there are other major cities on the continent that we will kind of launch this, and we imagine there's other emerging economies across the world that.
And what does launch look like? Like, what does it take to launch a new city? What do you do?
So I mean, we imagine that we would need to partner with in-country companies and in-country teams of people who are doing similar things. But with the distribution that we have globally, we'll be able to kind of scale up quickly.
Stepping back a little, I mean, this was mentioned earlier, but there's an overarching kind of education gap here on what this even is, right? And if you're going out to individuals and then showing them this platform and trying to drive adoption, that's the crux of the matter. So how are you thinking about it? Are there analogies to things that people are more familiar with, or how are you even going to market with that in mind?
So right now, a lot of Nigerians living abroad actually purchase real estate, but they're doing it through maybe a second cousin or someone they met somewhere. So what we're actually offering them is a simpler way to do this. In addition to that, though, we want to provide macroeconomic data about every country that we're in, as well as sort of more granular data about neighborhoods, what yields mean, how appreciations look, etc. So there'll be a very solid education process as well. But it's people are already doing this just in an unsophisticated way.
Final question? All right, one more round of applause for Fiverr. We have one final startup presenting today, at this session at least. That startup is PopBase. Presenting for PopBase are Lisa Wong and Amit Tischler.
Personality sells. Over 130,000 people attend Comic-Con every year. This started off as a 300-person event to buy and sell comic books, morphed into this worldwide phenomenon. Because from Comic-Con to Disneyland, we just love engaging with characters. We know it's not real, but as long as we're having fun, we'll play along and we'll pay for it. $82.8 million is generated by Comic-Con attendees every year, and the Disney parks generate $10.7 billion. Let's face it, it's a fan-based economy now. Consumers expect brands to be personalized, emotional, and immediately engaging in exchange for attention span, but digital characters have fallen a little short, right? The way that they feel right now is that you feel like you know them, they don't really know you. Until now. Introducing PopBase. PopBase is a content management platform that allows creators and brands to deploy a character as a digital asset. That asset can engage through games and gamified experiences, and those experiences can be monetized through in-app ads and in-app purchases on the PopBase app. Now, Kim Kardashian, she turned herself into a digital asset. She made millions on her game. But this is really too expensive for most brands. It requires an upfront development cost as well as ongoing maintenance fees. So let me show you how easily PopBase takes care of all of that for a brand. And I'm going to use a YouTuber as an example. Move to demo, please. So this is Larry Bundy Jr. Now, Larry is a YouTuber that has over 335,000 devoted fans on YouTube. He's like Kim Kardashian in that he is a personality-driven brand. What that means is that his content has to feel like it's authentically his, right? It has to be about his persona. Unlike Kim Kardashian, he does not have a team of people to create the content for him. It's kind of all Larry. So by using PopBase, let me show you how easily Larry can manage his fans by keeping them updated on his latest news.
Hello, you. I'm Guru Larry. I've been shrunk down into this amazing app. Isn't it exciting, ladies and gentlemen?
Of course, they can watch his latest videos on that television, and very importantly, they can play monetizable games. We get to add to Larry's bottom line, which is very important to us and Larry. So Larry has actually queued up a quiz for us. We have it here on the dashboard. Let's just save that and make that go live. The advantage of a digital character is that the digital character, oh, there it is. It's updated. So let's go ahead and play that game.
Okay, let's get started. Which of the following is not a
Okay,
quote
so
from a
I had to make this joke, because you never get to do this in your whole life. You're making the world a better place, Ed up Pulte. I knew the answer. Okay, so Virtual Larry can engage 24/7, always building that one-on-one relationship, and also do things like give a shout out to one of your cohorts at TechCrunch. So back to slides, please. Now, we build proprietary tools so that creators can focus on managing their content, but of course, we're not just sticking with trivia. We're going to add additional game templates as well so they can extend their portfolio and their reach. We filed a patent for this workflow. We also filed a patent for the character as a dynamic data format. So if you imagine like Google AdWords puppeteering a character, that's what we're doing. Now, GameMaker and Roblox, they do allow people to make codeless games, but it is quite labor intensive and it is not about brand management. Matchmade and Game Influencer are more about matching up celebrity influencers with development studios. Popbase is about letting anyone make a game that has the responsiveness and immediacy of social media. So we're going to focus by starting off with YouTubers that have a fan base between 10K and 1 million. This translates to be about 3.12 million consumers for a potential ad revenue of 19 million a year. We're going to do a closed beta with 5 selective influencers that have a combined audience of about 1 million. We have a 60-40 rev share split in their favor, as well as a recommendation incentive. And of course, we are integrating an avatar building system and working with influencer agencies so we can scale rapidly. As we expand Popbase, we move it to the cloud. We integrate AI and analytics so that our creators can focus on creating new dynamic experiences and really not have to worry about their technology toolchain. My team has over 60+ years of industry experience combined in the gaming space. We have shipped products for LucasArts, Sony, Activision. The short version is we really do know how to do this. We know our stuff. So, whether you are a teacher making pop quizzes, or you are a YouTuber, or you're a traditional brand, or you're a company and you want to make a fun training game for your employees, come and play, create, make a little cash on Popbase.
Okay, judges.
Simple question, I guess, and it's related to the answer that you gave to that quiz. How does this actually make the world a better place?
I just had to make that joke because it's meta, and I probably will never get to do this in my life.
Fair enough. No, but I meant that as a serious question.
Okay, serious question. Okay, so my background is I started off as an artist, right? And so I am very creative-centric. And one of the things I realized, and this is like no offense to, I love engineers, but they tend to think that code is like the only real work, right? Sorry, but you do. So engineers and artists, everything you love is made by a creator. Everything. Everything you wear, everything, you love that. But all artists have been brought up to sit there and think, you're so lucky to be working. God, you're so lucky. And you're like, but you love what I do. So YouTubers are the same thing. You're watching YouTube not because you go like, hey, I really love pressing the buttons on my website. It's because you love that guy, right? You love what they're telling you. And they're really getting squeezed. And I want them to be able to have additional revenue so they can continue doing what they love. Because that's what they told us.
Okay.
How are you thinking about showing the first batches of creators what can be done, right? Like, are you guys actually going to launch the first several apps yourselves and, kind of get them out into the world? Or oftentimes in something that can do so many things, it can be really overwhelming. So how are you thinking about, kind of getting people into the platform?
Well, Popbase is a single platform and all the creators are on it, right? So we are hoping that they sort of discover each other. So Larry has his own base, but he's in the neighborhood, right? And then there's other creators in those neighborhoods. So if you're a consumer, you say, hey, I really love, our first go-to-market is going to be trivia games, right? Let them author trivia games. So if you go, I'm a trivia game player, I love pop culture, and I suck at sports. I'm identifying this right now. So I only want to play sports-related trivia. I look that up, and I go, okay, Larry is doing pop culture, so is this other girl, Mars Girl. I'm going to just play those trivia games. Hopefully they can help each other out. Does that answer your question?
The trivia game piece does, yes. Okay. So that's where you're starting.
Yeah, we're starting with that.
Yeah.
What's the longer-term vision here? We've had startups in this particular segment of the competition who, are shipping 40% of the grain to a particular country, or who are trying to elevate the real estate market of another country.
Yeah.
What do you ultimately want to be?
I want to be the infrastructure, so it makes it feel like when you meet a character that you know is imaginary, you don't care. You're going to play along. You're going to have that magic trick. The same way that when you go to Disneyland and you go like, okay, Mickey doesn't blink, but it's still so awesome, right? And we kind of knew that you had to enable storytellers to sort of feed into the system because they're so good at building character, and technology just isn't. Like, I kind of joke that there's a thing of technology where they tend to report a story instead of tell a story, right? So that's what we're building.
Speaking of that, becoming a full person and knowing how they behave, how long does it take you guys and how much does it cost to create one of those characters that can really feel and look like the personality I might see on YouTube?
So one of the things that we found when we were doing this is that, and this is what I also like, so Larry is obviously, he's a real person, right? That's his voice, that's his content, but he's a digital character. This is his logo. One of the things we found was so great is his personality and his content was so identifiable that that's kind of the magic trick of when you're even playing games, right? You kind of go like, hey, this is good enough, and then you're just going to play along. And then we expect, of course, because this always happens, right? It gets faster, the fidelity gets better, and it'll look more and more like whatever the brand wants it to look like. But we actually got, he has fans, right? And when we were on the floor, someone tweeted and thought we had like ripped him off because, oh my God, they're using Larry Bundy Jr. And then there was a pause. Like, oh, wait, no, that is Larry Bundy Jr.
But is your model somewhat like an agency? I'm hiring you to create this character, or are you generating it at scale?
We're generating at scale. So we're integrating an avatar building system so they can actually just sort of, it's like Sims, right? They can just kind of build that themselves. They get to brand the experiences themselves and then just use additional gaming templates to just play with their fans.
So it sounds like you want this to be kind of an open platform. Anyone can kind of utilize your tools. But does this really work for everyone? Like, do you have to have the brand of a Larry or of a Kim Kardashian for this type of tool to really work, or do you feel like you can bring in any type of character and their brand will be reflected through your...
So we obviously started from the entertainment space, and we were thinking very much like, oh, people have personalized brands. One of the things that has been so interesting for us as we've been showing this is a lot of education. A lot of people saying, hey, I'm a teacher, I want to create something, I think my students would play with this. A cartoon version of me somehow is more compelling. Right? So yeah, I think that the extension of this is very much like a trivia template is a game. It's a pop quiz. It's a training. It's a training experience that allows you to sort of close the loop and give reinforcement. So.
And you feel like the creative elements are built in that versus someone having to bring the creative?
Yeah, yeah.
So in your competitive slide, you mentioned that there were other companies that allow folks to, without a ton of engineering knowledge, to build games on the platform. And obviously, as you claim, you have additional features. Why do the additional features make what you're doing more desirable than the other open game development platforms?
So we are very much focused about people who want to sort of focus on managing their brand and using sort of gamification to do so, right? The power of what the experience is really going to be about their voice and their personality. The other tools, they're really cool, and I love them, but that's because I make games. And they really do favor people who say, hey, I'm someone who's a game designer, and I just don't want to learn how to code.
Okay. All right, give it up for Pop Base.
Thank you.
All right, that wraps up this session of the Startup Battlefield. The judges are going to follow me off stage. We're going to go backstage and deliberate, choose some finalists. Before they do, though, give it up one more time for our awesome judges.
Ladies and gentlemen, please welcome back to the stage TechCrunch editor and Disrupt MC, Jordan Crook.
I'm not even embarrassed. I just want to see you guys say hi and stuff. How is everybody feeling? It's tired and it's the afternoon. And everybody wants to go to see the Startup Expo downstairs, the next stage and stuff. I hope you guys are keeping up with the agenda because I haven't done a good job of talking to you guys about what's going on in rooms other than here, mostly just because I'm jealous and I want you all to myself. So I appreciate those of you who have hung out. You guys are feeling really warm right now. Cool, thank you, appreciate it. All right, let's just jump right in, I guess, to our next panel. We're gonna be talking with the leaders of Consensus. Raise your hand if you're familiar with Consensus. You guys win. There's something under all of your seats. No, I'm just kidding. Please welcome to the stage Joseph Lubin, Amanda Gutterman, and Sam Cassett, and your moderator, John Russell. Warm welcome, please.
Thank you. Okay, good afternoon. We're here to talk about crypto, blockchain, and Consensus. We've got 3 people from Consensus, Joe, Amanda, and Sam. So who wants to start first? What is Consensus?
What is Consensus? So let me start first. I'll do a sort of
okay, Joe.
more historical aspect, and maybe Sam can jump in and flesh some stuff out. So a year into the Ethereum project, we were getting ready to release version 1 of the Ethereum platform. It actually took another 6 months through various delays, but there weren't a lot of people building at the application layer of this decentralized application platform. So I started gathering some people. There wasn't a lot of activity in the United States